What did you say?
Hi, I'm Ray Meadows at Berkeley Investment Advisors, and this is my friend Hiromi. We're here to talk about investing.
Hello.
You had some questions for me?
I do, but I don't know how to ask you. I think last time I asked about you how I can get started, right?
And I told you about mutual funds.
And the other one.
Oh, the other one.
What is the other one?
The other one is opening a brokerage account and investing in exchange-traded funds by buying it on an exchange through your brokerage. So you put in a bid on the exchange and then you try and buy it from another investor. So an exchange-traded fund, it's also called an ETF. You hear this?
Oh, I see that all the time.
You hear this acronym, ETF, all the time. It stands for exchange-traded fund. It's a lot like a mutual fund, so it's a pool of securities underlying the fund that someone has put together, and they're selling it through an exchange as a security on the exchange. So that, because of that, you might end up paying a different price than if you bought the pool of securities as a mutual fund. Because when you buy a mutual fund, you automatically are paying your share of the value of the portfolio. But when you buy it on an exchange, you're just bidding against other investors for this pool of investments. And you might bid a price that's different from the actual value. So it could be different from the actual value. So that's really the difference.
What?
And then... That's the main difference. And they trade during the day. If you buy a mutual fund, you only pay the price at the end of the day. Versus a mutual fund, you can buy at 9 a.m., 10 a.m., 11 a.m., anytime during the day, and the price will be different.
So,
okay. Now, the other thing...
ETF?
ETF is what you buy on the exchange. And it could be, there's different ETFs. And the way that these things are usually constructed is there's an index that says, oh, like for example, the S&P 500. It's a list of 500 stocks. So you can buy an ETF that represents a pool of money invested in 500 stocks. And it'll always track that 500 stocks. So that's called index ETF.
I'm still lost.
What's your question?
I need a visual.
A visual?
Like, maybe. How is that?
I'm not sure I understand what part's confusing.
So you said mutual funds.
And it's a pool of money.
Pool of money.
Invested in stocks. And so
then what is this one?
This is also a pool of money invested in stocks.
So it's separated?
The difference is how you buy them. In one case, you're buying it directly from the manager and you're paying a price that's equal to your share of the portfolio. In the other case, you're buying it from some other investor for whatever he's asking the price on the exchange. So let's say the portfolio is worth $100 exactly. If you bought it from a mutual fund, you'd pay $100. If you bought it on the exchange, there could be the price could be $100.50, and so you end up paying an extra 50 cents because you're in a hurry and you want to buy it on the exchange.
But why would you do that if you're going to lose money? I mean, not losing, but paying more. Why would you spend money on this? Why does it even exist?
Why does it exist? Because people don't have patience. They want to buy it now, not the end of the day.
Oh, I see. That's what it is. Patience, everyone, patience.
That's basically what it is. Now, that can go the other way. You might be able to buy that thing for $99.50 if someone is desperate to sell and you are there to buy.
Is that how you make the money?
Well, that's one good way to make money.
The difference.
But most of the time, there's a lot of really smart people trading these things on the market, and they got a lot of money. So that keeps the price pretty close to the underlying portfolio.
I see.
So a really big ETF like the S&P 500 is not going to be trading more than, I don't know, a few cents away from the underlying portfolio. But certain bond portfolios, they could trade 50 cents away, like I just said, like 0.5%.
That's a lot.
It's a lot. So if you're going to trade bond ETFs, you should be careful what you do.
Okay. I don't think I'll touch it.
Start with mutual funds.
For now. Until I get this right.
Until you get the hang of it. Right. Exactly.
Okay.
Okay. That's it for today. Thank you.
Thank you.